Hey, welcome on YouTube. Welcome to yet another beautiful video. My name is the Debo, and in this channel, what I do is I document every bit of my life. I document my journey to financial freedom. So, if you are one that would like content like this, I want you to please subscribe. Today, basically, I want to talk about risk management. I want to talk about risk management in trading. You see, if you are a beginner trader, one thing that is really crazy to manage is risk management and discipline. One thing I like about trading is the fact that it opens up the loopholes in your life. If naturally before trading you are not a disciplined person, it will be very hard for you to be disciplined while trading. And trading will try to correct that part of you. I was once an example of it. I have never been a disciplined trader from the beginning until I learned the very hard way, the extremely hard way. Trading is free to learn. Every time you take losses, you are paying tuition fee to the market. And how can you get your reward for paying all of those tuition fee? Is discipline. And once you are disciplined in trading, you will find it 80% risk free and you find it 80% easy. So let's take a scenario. Sometimes people say if you want to trade, risk 1% of your account, risk 0.5% of your account. But I am not from that school of thought. You understand? I'm not from that school of thought that you should be risking 1% and 2%. Sometimes some traders want to go aggressively. Other traders want to be conservative. Other traders want to be conservative and they want to grow their account slowly and steady. It still boils down to the kind of person you are. If you are the kind of person that would like to go aggressive, fine, yes, you can go aggressive. But also, if you are the kind of person that would like to, you're the kind of person that would like to grow your account slow and steady and enjoy the process, it's fine. For those of you that want to go aggressive and want to get double of your account, that is the part that you get it all wrong. Imagine you have $100 account and you are risking $50 per trade. You just have 2 trades to blow that account. And how sure are you that if you are taking 2 trades in that account, you get them all? You get the 2 trades right. You win the 2 trades. You are not certain because the market happens with there's a whole lot of on unheard and unsure, on even unimagined events that are happening in the market, right? A lot is happening. You might do your technical analysis and you want to buy the market, and all of a sudden the market is going bearish. Fundamental play a very long role. I think that is yet another topic. But one thing I will advise is okay, let's take $100 account for example. If you have $100 account, I would always say, and that's the way I do it, I would always split my capital in 5 places. If I'm having $100 account, I take $20 per trade. I'm still going aggressive. I take $20 per trade. It means that I have 5 trades to blow that account. And in that 5 trades, what I usually do is I take 1 trade in London session, then I take another trade in New York session. But if I don't find a setup in London session, I don't go hunting for setups. I allow the market come to me. I allow the market come to my POI. That is another aspect of discipline that you need to learn in trading. Please, if you're enjoying this video, I want you to like and subscribe to this channel. So that is another part of trading you need to learn: discipline. If I don't see a setup in New York session, I'll wait for Asian session. Most times I live in Nigeria, I am mostly not awake for Asian session, but the time that I am awake, I tend to look through the market. But if I don't see setup at all, I do not force them. I just let it go. I just let it go. That is one thing you need to learn. Let's say you have a much bigger capital. You have, let's say, a $1,000 account. In that $1,000 account, that is where I will advise you to trade conservatively. You need to trade the 1%. In fact, if you're having a $1,000 account, I would advise you to even trade 0.5%. That is like $50 per trade. You can still choose. It depends on your capacity. I do not know you. I do not know your capacity. I do not know what you are capable of doing. Do you understand? So it depends on your capacity, and it depends on how risk aware you are to take those calculated risks. Imagine you have a $1,000 account and you are taking 0.5% risk per trade. You have about 20 trades to lose that account. So if you risk 0.5% and you lose 10 trades in a row, which is quite I see that as it's really crazy that you lose 10 trades in a row. But let's say it happens, you lose 10 trades in a row. Before you even get to the point of risk management, you need to be very sure of your strategy. Have you backtested your strategy? Do you have up to 80% win rate while backtesting your strategy? All these are the things you need to put in place. You need to consider while wanting to even trade that small account. The only thing, this video is getting really long. The only thing that would keep you in the game for a long time is proper risk management. There's nobody out there that has done it big that is not risk aware. You need to be aware of the risk you are taking. Like they always say, you should only invest what you are willing to lose. That is a general rule. Only invest what you are willing to lose. Do not borrow money to trade forex. Do not take loans. Do not sell properties to trade forex. Risk what you can afford to lose. And above all, be very, very risk cautious. I will do yet another video and I'll do a proper breakdown of how to scale your small account to maximum 50%. We're not trying to flip here. How to grow your account maximum 50% we're not doing this in one day. We're not doing it in 2 days. We're not doing it in 3 days. I have taken $100 account to $500 in a month, in 2 weeks. It depends on the market condition, right? So you can do it too. I've passed Propfirms. The last video I posted, I passed a Propfirm in 36 days. That is like a month and some, let's say a month and 1 week already. So you just need to be conservative. while trading. You just need to be risk calculating. Every risk you take should be worth calculating. Do not blow out your small account while trying to do a quick flip. A quick flip will not give you a good return of investment. You are here to stay for the game for a long time. Quick money, easy go. Quick money, quick go. That is one rule I live by. I've once tried to flip my $100 account, and all the profit I got was wiped away right in my eyes while trying to flip. Like I said, I'll make a proper video of how to calculate your risk per trade for small accounts. I will make a very detailed video. I was really bored at home, so I just came out to enjoy the free breeze of nature. And I thought it's wise to just make a video here and talk about risk management and discipline, psychology. The biggest part of trading is not even learning a strategy. The biggest part of trading is the psychology part of it. Trading is really boring. Get to be indoors Monday, Tuesday to Friday. The only time you have chance to even come out is the weekend, and most time the weekend I usually use mine for back testing. But today I just decided to escape the whole route of being indoors.